Welcome everybody to your market update. My name is Amol. I have the pleasure of speaking with Faisal today, and we're going to talk about a lot of things. I think Faisal has a lot of tidbits to drop regarding, his uniqueness that he sees happening in markets, leadership that he sees forming, how he sees the Q1, Q2 shaping up and the rest of the year. And we'll get into all the nitty gritty of other scalp trades, trading opportunities, sector analysis, and whatnot. So welcome, Faisal.
Thank you for that introduction. Pleasure to be here and always good talking with you.
Yeah, it's, last video we had the pleasure of being here with Austin, and he dropped a lot of good alpha, and you did too. But we got to give it to the GOAT, Austin, as always, the ultra mega, perma bull. But last time I remember he said that he was more bearish than he's really ever been. And he was actually thinking about, for the first time in maybe 20 years, thinking about going net short. First of all, what do you think about that?
Oh, I think definitely the time to go net short was probably in the first quarter of 2022. I don't know if I would go net short now, even though I don't think you can find many good long-term opportunities. I think it's just kind of like, you can kind of play this give and take game where you go long at the bottom end of ranges or support levels, and then you can short pretty heavily on the top end of the ranges, and hopefully things turn out. But I think probably the best way to go would be to stay hedged, because this market continues to be just unpredictable on the short term. I'm a short-term guy. That's like my specialty, and I'm definitely having a hard time kind of navigating through week by week. Definitely a lot less continuity, a lot less unity in terms of the leadership in the sectors. We'll go over a couple of things later on, but it's definitely a tougher game. And I thought coming into the year it was going to be a pretty great environment for stock pickers, but man, it's very tough right now.
Yeah, I definitely agree with you. It's been one of those choppy markets that is not able to make up its mind. So, given that, let's talk about this week, right? So far this week, how have things panned out? What are you doing in the market? What do you see?
Oh, this week has just been very, very tough. Coming into this week, I was pretty hot on industrials and pharmaceuticals. And pharmaceuticals, actually, you look at names like MRK. Oh, I got a hair, eyelash. MRK has been fantastic. I think the short-term structure looks really great. The fundamentals look great. M&A cycle coming up. It's actually, it's currently happening, and these companies are pretty have pretty good balance sheets for the most part. You look at AbbVie and Eli Lilly, AbbVie and then LLY. I think those are probably my top three in the sector. LLY is one that I'm actually thinking about getting in to, probably in the very short term, if it gives me the right short-term momentum, because it looks like it's found a support level. The sector looks great. And once again, these are more defensive stocks. And if the market's kind of showing me that it's going to be volatile, it's going to be unpredictable, as we've seen throughout last year. Look at this chart. This chart is a phenomenal chart.
Yeah, especially since COVID, it's just kind of up only.
Yeah. And considering last year was just a terrible year, look how good this short-term structure was. The long-term structure looks good too. So yeah, these are the stocks that I'm looking at. Definitely defensive plays, but once again, they have growth initiatives in terms of M&A, and in Eli Lilly's case, they have a pretty good pipeline coming up. So yeah, I'm paying attention to those. And I think last time we talked, I was pretty hot on industrials, and I think they've been okay for the most part. But I think coming into the week, I was pretty hot on them.
Can you drop some names for industrials?
Yeah. So two names that I really like. Oh, Deere reported, I believe, Friday. They had a fantastic earnings report, really good guidance and good demand for their products. CAT is also another one that I watch. And then AGCO is another good smaller one that's also in that the farming industrial industry. And then URI is one that's hit a 52-week high recently, so that's gained a little bit of attention for me. These four names, they tell you a lot about the industrial cycle and everything. And as I talked about last time, This industrial cycle, I think, is going to be propelled by numerous tailwinds from, the government, government bills like the Inflation Reduction Act and the infrastructure bill to, things like globalization kind of coming to a halt and more onshoring and of supply chains coming back. These tailwinds are gonna push these companies to more sustainable grounds over the next, 2 to 3 years, in my opinion. So these are sectors that I'm watching, but in the short term, these stocks look a little bit too hot. I've kind of cooled off on them, and so I'm waiting for a better opportunity to get in.
So you've cooled off on some of these stocks. And does that mean that you've also cooled off on sort of the energy trade that we talked about last time? Because I know that goes along with the ESG narrative and the sort of inflation reduction, narrative that's happened over the last year or so.
Kind of. I think more so energy is more tied to the China reopening, the global economy kind of getting back on track, because as you've seen, you could look at the price of crude.
Okay.
Crude continues to be a really weak asset, trading at the lower end of its range. Really hasn't picked up any momentum, and so I'm actually waiting for crude to give me the right sign. We could be very close. It could be 2 or 3 days of selling before crude starts to bottom out around that lower level, the 69.5 level. That's probably when I would want to take a shot on anything from Exxon to EOG, which is reporting tomorrow. Probably my premium energy names. So I still like these names, but I think you have to be a lot more patient with them, trade them at the lower end of their ranges, and really kind of pair them with the commodity price, because the commodity price has not been helping them lately. And I think that's been one of the main reasons they haven't had that juice over the past month or so. They've been fine, but they haven't really been making those new highs.
So yeah, we'll talk a little bit more about commodities because I do want to dissect that. I was going to say that in terms of energy, right? I remember all last year, everything that we looked at was just, inverse trade of oil. And then, you start looking at 10-year rates, right? Whoops, wrong one. You start looking at 10-year rates, and then you start looking at the Dixie, right? These are the most common things that we were all sort of, looking at time and time again. Do you think that right now, at this point in the market, oil is somewhat of a non-factor, but rates and dollar are still very much a factor?
Yeah, I mean, I don't think oil, when oil was spiking up to, what was it, $130, I think everyone kind of feared that this would take away from consumption, just really overall hurt the consumer. And at this point, when oil's at $73 or whatever, 72, I don't think people have that type of fear. So yeah, it's mostly relegated to affecting, just energy-based assets. And then you said the dollar and the 10-year, those two definitely have big implications. Definitely the 10-year is something that I think the market is digesting. And in the short term, last week we saw the 10-year rise substantially. Interest rate volume picked up pretty high compared to the past couple months. But the market still stayed firm. And now you're starting to see the market kind of come down. And I think that's a factor that's playing into it. You haven't seen the dollar break out yet, which is strange, because usually the dollar will break out of its local resistance levels if interest rates start to break out. But I haven't seen that movement from the dollar that you would expect. So
it looks like it's kind of put in a local low, but it doesn't mean that it's ready to launch. It could just be range bound for a little bit, right? The cap could be like 105, 105 and a half, and the base could be at 101, and we might range for like, I don't know, another 3 months or something.
Exactly. I mean, but I don't really know. I really thought the interest rates rising was going to be the biggest factor, or the foretelling factor that would tell us, okay, is the dollar going to break out or not? And now I'm starting to, shift away from that a little bit. And I think that, the weakness in the dollar might have to do with the strength of the global economy. I think Europe is doing much better than people thought. There was a lot of fear coming into the year that we could get another energy spike. I think China reopening, Japan doing okay.
Just sort of looking at the DAX here, at the bottom screen. Let me see if I can bring that up.
Is DAX German?
Yeah, that's the German index. And did I get the ticker right? Yes, the German index, right?
A bit, yeah.
So yeah, it's kind of like you're pretty spot on. It looks like okay, global economies, whether you look at, the Hang Seng Index in Hong Kong or China, or you start looking at the Nikkei in Japan, DAX in Germany, the Sensei in Sensex in India, all these different indices around the world are either hitting, 52-week highs or all-time highs, or, much stronger trends than the S&P 500. So
Yeah.
does that kind of mean that global economy as a whole will carry the US into just, maybe higher prices in our equity markets? Or do you still believe that there may be still, underlying weakness in the market and we still need to be cautious?
I wish I knew. I actually don't know. That's a really good question. I mean, I just like to think of the fact that over the past 5, 6 years, when you're talking about buying into these assets like emerging market assets or European assets, they were really not that great compared to what you could get in the US with
They're
low interest
terrible
rates. So
performers.
yeah, and so now you got, things like treasury bills giving you a good return. You just have a vast wider array of options that you can choose from, instead of just picking solely US equity. So sure, I think that could dampen the overall demand for US equities, but I don't know if it's going to dampen it that much, because until Europe shows that it can really show a lot of growth, and China still has its own problems too. I mean, Chinese stocks had their worst day, either it was yesterday or today, that I had seen in a bit. Stocks like PDD, which had been a Chinese leader, was just gapped down crazy. I think
Yeah.
down 8-9%. And so I'm continuing to monitor that situation. But once again, it's like the options for investing have become a lot wider. So I would assume that US
I was
stocks.
going to say, but to be fair, PDD, some of these stocks from China, they did have that infusion of, liquidity, right? China has repeatedly talked about, hey, we're basically going to support the market or inject more liquidity. I think their optionality was first injecting 1 trillion and, 2 more trillion, maybe on the sidelines waiting to come in. And so some of these assets are up 100%, as you saw PDD. Does that mean that, okay, well, China itself can roar higher and those might be the better picks, like you mentioned PDD a while back, and we may need to be a little bit more cautious on the US stocks? Or do you just think, China is still, just as risky as US equity markets?
I think China, obviously, it's like you're kind of looking up versus US markets. I think we're kind of looking down, waiting for some imminent recession or soft landing or whatever. I think China's already hit that bottom. So there is that type of optimism. But one of the main reasons why I look at PDD, I mean, if you look at the company's last 3 reports, I don't know what you want to say about like Chinese accounting firms or whatever. The earnings for this company and revenue for this company have been phenomenal. The valuation for the growth rate trajectory has been phenomenal. So when I start to see this stock move up in a big way and hold key levels and break out, that gives me a surety that, okay, people are buying quality in China, and that's the least I want to do. If I'm ever going to invest in any type of Chinese stock or emerging market stock, I want to see the leaders like this that are already proving on the fundamental side that they're going to be bought. So once again, I think it's very picky. If I'm going to play China, because there's still a lot of risk, I'm really only going to play like 2 stocks, 3 stocks. Like Li Auto is an interesting one too that I've talked about, because I like the EV space. But even then, I'm still kind of like, I don't really know. I think PDD is like the only one that I would still play because the earnings have just been outright phenomenal.
That's fair. So let's talk about US equity markets a little bit more, right? Let's sort of dive into sectors. You said you were pretty hot on industrials. You like banks the last time we spoke, simply because if rates are going up, I mean, that's pretty beneficial for banks. Banks
The
are
higher for
obviously
longer.
Higher for longer narrative. Banks are obviously well capitalized and will do probably much better, even if there is, a soft landing or hard landing, whatever kind of recession.
Mm-hmm.
So, as of right now, aside from just, internally like day trading, right? if you were to give a feedback or analysis of the market to someone who's just looking at this whole chop fest that we've had, for the last couple of months, or rather, the 2022, which was a brutal year.
Mhm.
First of all, what would you tell them to look at, and how would you sort of tell them to reframe their mindset into being bear only or bull only? Like, what kind of what piece of advice would you give someone, looking to look at the market for a long-term perspective, like AI stocks, or other hot sectors, other sectors that you think could still do well in a tough and tumultuous market?
Yeah, that's a really great question. I think for the most part, because the macro continues to be really uncertain on a lot of different levels, I'm definitely in the camp where I'm not making any long-term investments. Even though I believe in AI and things like that, I believe in EVs. I'm not making any type of long-term investment until the macro, gives me some type of clarity. I think it can go either way. I think there's even a shot that inflation can go back up at this point, and I think people have to think that this cycle, this bear market cycle, will probably be longer than historically, most other bear markets, which are like 6-12 months. I think this could be like 12 to 18 months. And so we're going to get a lot of these rip roaring, bull runs, and then these bear market falls. So I'm in this short-term mindset. I'm all about the short to medium term. Even if you like things like AI or EVs, these long-term plays that I think most people are generally confident that they're going to be a major contributor to our daily lives in 5 to 10 years. I don't know if this is the time to invest in it. I think you can catch short-term spikes.
Are you saying this is not the time to invest in AI?
Yeah, I think you can invest in AI companies, and you can definitely play momentum with AI-based stocks. But no, like, I think a lot of them are, especially the pure AI plays, like, C3 AI, and then there's Big Bear AI. They're still very not immature companies, but they're definitely not profitable. They don't have the cash flows that would be good in a rising interest rate environment. If rates weren't rising and the inflation picture wasn't so cloudy, I would definitely say, sure, take a shot on them.
What about like a big dog? What about a big dog like Microsoft? Because it has ties to OpenAI, this whole Chat GPT wave that's going on.
Yeah, I think Microsoft's an interesting case, and this is actually one of the few tech stocks that when I do feel a tech bounce, this is the one that I want to buy, partially because of what you said about AI. I think Microsoft's AI brings in a new type of investor, kind of the growthier investor alongside, it gets the older, more seasoned investor excited about potential growth prospects. I definitely think if there was an AI stock to play, I would absolutely play Microsoft over something like an NVIDIA, even though I think NVIDIA is going to be
What about
more
Google?
liberal. I would definitely do that.
Google?
Oh, Google is interesting. I think Google, a lot of the downside has been overshot. But at this point, you don't want to fight the tape. I think the sentiment has turned on Google, and until they can prove some type of meaningful change in terms of AI or the way they do operations, like a big job cut or something like that, to change the operating efficiency or the growth prospects, I think this stock is really going to struggle, and it's going to stay in Microsoft shadows. I think people were really disappointed by the Bard conference and things like that. But I personally, I wouldn't doubt Google. I think Google is going to be a top 3 AI play at some point. I'm not ready to buy it right now. Even if their products come out, 3-4 years down the line, I'm definitely not ready to buy the stock for that time frame.
I was personally thinking that, the fact that the BART demo did not go well, and Google being sort of a top dog of the industry, honestly, I'd be extremely surprised if Google does not have an AI concept or play that is comparable to OpenAI,
Yeah.
maybe even better, connected and suited for just general, commercial use or public use. I think they just may be holding back. I remember a while back, I was reading that they said that they had their AI products ready to use, 3-4 years ago. They just thought that it was commercially destructive. And don't quote me on that. I think somewhere along the lines of, they believe that it may not be fully ready to be out there in the public, because people may use it for dangerous purposes, or maybe using it for spam or bots, or really just going apeshit on the internet, really.
Yeah, I mean, students don't even got to do their own essays anymore. Like, it's a crazy time right now. So
they're passing it's passing the bar exam. It's
yeah,
it's the medical exam. So it's doing some amazing stuff.
yeah.
I do want to point members and those who are watching your attention to, first of all, our community. We provide a lot of like insight, regarding just AI related products. We talk a lot about some of these Discord groups that I'm in, like Stability Foundation, Stability AI, ChatGPT, OpenAI, Midjourney, which is another one I've mentioned to members before. Right, all these different products. Okay, these are somewhat of the backbone, I believe, foundational companies that we are going to be using directly or indirectly in the next few years. And you guys definitely want to follow these and experiment with them. I remember Faisal and myself, we tested just for fun, things that are happening in ChatGPT like months ago, I think, before this, massive social media revolution started. And I'm glad we did that, because we at least understood exactly what was going on, before the trend happened. And this is how you can get ahead of the trend. You can join our community, stay up to date with our content, all the things that we talk about, whether it's AI related. We're a pretty crypto heavy focused community, but we do talk a lot about, equity markets, and having Faisal here with me to run me down on everything that's happening in equity markets helps a lot. So if you're watching this video, make sure you hit the thumbs up, join our Discord channel. The link is below. Now going back to the conversation, right? So Midjourney, Stability AI, ChatGPT, OpenAI, and then whatever Google comes out with. I think these are going to be the foundational players. Now, tying that into, well, who are the infrastructure players behind these? I think you had an interesting take, and I think Austin had an interesting take last time, where you guys both believe that it would be chips, first of all, one, being the leader that may lead us out of the bear market, and two, there'd be foundational plays for AI in general. So if you don't want to play an AI stock, you might be, I don't know, somewhere in the NVIDIA universe or AMD or things like that. Did I kind of get that right?
Yeah, I think that we have differing opinions on what's going to lead the market on the outside, but me and Austin both agreed that NVIDIA's are going to be, or chips are going to be like the lifeblood of AI, and I think that's a very common theme too. I think that's already baked into a lot of what AMD, stocks like ASML, NVIDIA, it's already kind of baked into there, and I think that I don't know how much NVIDIA made on their AI chips. The report just came out, I think like an hour ago or so. I didn't get to read all of it, all the headlines, but apparently their AI chips are starting to get in demand. I think the demand really picked up this quarter, with all the AI hype in stocks, and just in general, people wanting to learn more about how they can integrate it into their business. Driven by AI chips. Okay, there we go. So you're already starting to see, that AI push pay off, and I think it's only going to get bigger and bigger and become a bigger part of the pie. I think chips is a great way to do it. ASML, once again, a chip equipment maker, great way to do it, because you cannot have high-end chips without the lithography technology that ASML creates. I would say, I'm trying to think if there's another AI like core play. I really can't think of one right now. Those are kind of like my main ones. And then of course AI will be distributed to every industry, from cybersecurity to industrials and manufacturing. And so we're gonna see like an operating efficiency revolution once these things get up to speed and mass produced and mass used.
Yeah, that's fantastic. Well, listen, I don't want to take up too much of your time. I think this was a pretty healthy discussion. I do want to have you back at some point, later this week or next week. I know that in March, mid-March, we do have CPI numbers coming out, and then an FOMC meeting. We definitely want to get your insight, on just market positioning in general. Is there anything else that you want to leave us with in terms of thoughts?
Yeah, I think just stay defensive. I think even when the market gives you a lot of volatility and you keep one at a time, the big tech trades that we're working out, the snowflakes and everything, I think just keep an eye on the defensive sector. So keep an eye out on a stock like Pepsi, for instance. I haven't checked the stock of Pepsi in a bit. I want to see how it's doing. Okay, looks somewhat tradable. I think these stocks are going to be more tradable and give you a lot more continuity from a week to week perspective. If you're a swing trader, a day trader, like I mentioned, pharmaceuticals, I think they have great prospects. Things like insurance plays, banks are a little bit, yeah, Pfizer's
Uh,
not.
it-
Pfizer's dealing with their COVID crash. That's why they're not on my list right now. But they could end up picking it up. Um, but insurance plays, like Chubb, I think Austin mentioned last time, CB. Um, there's also Progressive Insurance, the ones with the car insurance with those that crazy girl, I forgot what her name was. That stock is awesome. Stock has done fantastic.
Progressive,
PGR, yes.
and there we go.
Yeah, so
Wow.
you see the strength of the uptrend. So don't discount these consistent businesses that are not really changing the world, like AI and things like that, because these are the ones that are going to outperform. And I think they give you the most odds of success, especially if you're a trader or swing trader. So
Love
yeah,
it.
that's what I would just leave on.
That's fantastic. That's great insight. Anyone who's watching, if you guys want more updates from myself or Faisal, you can always find us in our Discord community. Again, the link is below. You can find Faisal on Twitter as well. I will drop his handle in the description below, and then come hang out with us. If you have any more questions, drop us your questions. All right. That's it from us for this week. And we'll catch up with you soon. I hope to chat with Faisal a little bit more. All right. Cheers.